Hit it.
It's Friday, October 18th, 2024, episode 250. I'm Patrick Ceresna.
And I'm Kevin Muir. First of all, Patrick, congratulations, 250. We made it.
We made
quarter of 1,000.
Quarter of 1,000. I love it, actually.
If we make it to 1,000, that's going to be...
That'll be something really impressive as fuck. We're going to have I'm going to have gray hair like you at that point.
Well, as long as you have hair. I don't have any hair left anymore. All right. Anyway. This week, we have the pleasure to welcome Tobias Harris, author of the newsletter, Observing Japan. We have a fascinating discussion of Japan's recent history, with Tobias helping put in context the events that led us to the current environment and what the next 10 years might look like in Japan. Then Patrick regales us with his different colors in talking charts.
And folks, stick around. We might drink some beers along the way. Danny, hop on. What beer are we drinking today?
I don't know. You're going to have to put it in my glass first.
Okay, all right. So I'm going to go. Now, Danny's recording at my place, so I'm going to quickly go give him, because the wanker completely forgot the beer back at his place. So I got to quickly share my beer with him. I'll be right back.
Danny, what is it? Tell us about the beer in the meantime.
So this is a Blood Light from Blood Brothers, which is a brewing company in Canada. I think we've had quite a few of their beers so far. So if they want to give us some freebies, that would be great. Let me tell you what it tastes of.
It's actually quite good.
It's pretty good. Citrus, tropical fruits, and I think there was some hints of oat and wheat in there as well, apparently.
Nice. Danny, what do you think about the quality of Canadian beer versus your own homegrown stuff from the UK?
No comment.
All right, let me go to the disclaimer. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include interest rate irritation, arbitrage anxiety, and bond market burnout.
Oh,
chose those ones for you.
It is a bit of a burnout. Okay. All right, let's get the guest on. Hey, everyone. It's Patrick here. Are you ready to take your commodity investing to the next level? Join me on October 24th at 4 p.m. for a free exclusive webinar on why commodity investors are leaving money on the table. In this session, I'll show you how to maximize your gains while managing your risks with actionable strategies tailored for the commodity markets. Whether you're just getting started or have been trading for years, this webinar is for you. Spots are limited, so make sure you reserve today. Head over to bigpicturetrading.com to register. Don't miss out. October 24th, 4 p.m. I'll see you there.
It's our great pleasure to welcome to the show Tobias Harris, the author of the newsletter Observing Japan. Tobias, thanks for coming on.
Thanks, Kevin. Great to be here. Thanks for having me on.
So our friend Marco Popic, who's now at BCA, he reached out to me and he says, listen, if you're wanting to talk about Japan, you got to have Tobias on. And I'm just so glad you made time. And it ends up being that you came at a perfect kind of point in terms of lots happening in Japan on a political basis.
Yeah, we are about 10 days out from a general election. We are a few weeks in the past was a very dramatic LDP leadership election. So yeah, this has been the season of politics in Japan.
Right. All right. So before we get into that, and we're going to, for those that are interested, we're going to talk about how Japan is changing. And one of the things that Tobias highlighted to me is how Japan has been politically stable for the past, 10 years. And he says, don't expect the next 10 to be like that. But before we do that, let's just kind of go back and learn a little bit about you, get our listeners get to know who Tobias is and how you came about this. You're obviously an American. What was the role, kind of the road to get yourself to be a Japanese kind of expert?
In some ways it was actually kind of simple. I got interested in the language between high school and college, and then got to college, started studying the language, and have always been something of a political junkie. So I just figured once I was learning language, then it was just, okay, how can I combine these two interests? And wound up doing a master's in England at Cambridge. And then from there, I was trying to figure out what to do next. And the advice from a lot of people was go find a Japanese politician to work for. So I did that, was on the staff of a Diet member for a year. Then,
okay, one second. So you're an American, you get into Cambridge somehow, and you're studying Japanese, like the language or
international affairs.
International affairs and also learning the language.
Yeah.
I take it you're fluent.
My reading and writing are probably better than speaking, just because I can read on my own. It's hard to talk to myself.
I see. So you need to practice some more. So you're reading and writing is okay. So you're there. You get yourself your master's, and then they say, okay, you should actually go to Japan. So you pick up, and is like I'm a complete neophyte on this. Is the main government in Tokyo?
Yeah. So yeah, Tokyo.
Okay.
Tokyo is. it is the national center, and in fact, you now have a prime minister who's very distressed by that, and they're trying to decentralize the country a little bit. But no, Tokyo is the business center. It's the political center. It is the cultural center. It is where life is centered.
Fair enough. So you get a job. What year is this? Like, kind of just.
This is. So I went over there 2006.
2006. Okay, so you get a job. And what was the attraction for them to hire you, a non-Japanese, like an American that had been studying in England? What were they looking for? And tell us a little bit about that job and how that was.
So, there's been, and in fact, I don't even know what the numbers of this look like now, but it's been, I think over time, it used to be very rare. You could probably count on, one hand or one or two hands the number of Americans or any foreigners really who found themselves working on the staff of Diet members. But you have some members of the Diet who are sort of more internationally minded. Like my boss then, actually, he's the new environment minister. He has an MBA from Stanford, his father was a diplomat. Just very internationally minded. And so generally Diet members like that, it was, a way almost to have someone on their staff who's maybe kind of plugged into the broader world, could help point them, do research for them on relevant policy issues. I did some work for him on, it was actually still a hot button issue, but certainly a very current issue then was plans to realign the status, U.S. forces in Okinawa. And so I moved them to Guam. So I was doing some research on that for him. This is, there are Diet members who have, who've gotten degrees abroad, who are internationally minded. And so have, when the opportunity presents itself, they will hire someone, to work for them with international, an international background.
You mentioned this Okinawa, and I was actually there, and I loved it. And it was a beautiful island. Like they call it the Hawaii of Japan. Yeah. And, what is the issue? I didn't even realize they want to get the U.S. forces moved off that island.
Not to get us too derailed, but yeah. It's a Cold War legacy, right? So at the end of World War II, Okinawa ends up basically as a U.S. colony. Well, right. The U.S. puts a lot of bases on Okinawa, right? And during the Vietnam War, a lot of bombers were flying over Vietnam out of Okinawa. Okinawa is reverted to Japan in the early 70s. A lot of those bases stayed there. And so you have one prefecture with something like 70%, more than 70% of all U.S. forces in Japan are in this one prefecture that's not very big, right? So a lot of the land is now used by, in the middle of cities and in populated areas. It causes a lot of issues. And so this is, trying to resolve this, trying to figure out ways to disperse U.S. forces. The plan also is to move some U.S. forces, like Marines, out of Okinawa, put them on Guam. Okay, it's a very tricky process. It's something that's going to take a long time. It's taken a long time. There was an agreement in 2006 that has still not been implemented. It's 2024. So
okay,
yeah. So this is a big. It's a touchy subject.
Right. All right. So you moved to Japan. What was that like as a young fellow? Like, how did that go?
It was an adventure. I was working for my boss was a upper house member from Kanagawa, which is where Yokohama is. It's south of Tokyo. Okay. I was living in Kamakura, which if you've been to Japan, it's it was an ancient capital. It's also got a beach. It's like the surfing hub of mainland Japan. It was like a cool place to live. It was just like, being there was it was a great experience. The thing that was really great about the job I was in, I was actually not doing policy work for the most part. I was in his district office. There was a big upper house election that year. So he was an opposition lawmaker.
Right.
And the opposition was really looking to win upper house elections that year. So I was handing out flyers outside train stations. I was knocking on doors. I was stuffing envelopes. I was putting up posters. I was, on the ground interacting with voters, which was just great. I mean,
That's
it was a really like my education in Japanese politics really started on the ground. And then I sort of filled it in with books, but really started with what I saw on the ground. And if there is anyone listening to this who is interested in Japanese politics, go and do that. Learn on the ground, because you just get a feel for the texture, just sort of the reality of Japanese political life in ways that I just never would have gotten.
Probably is like that in all countries, right? Like the reality is you can study and talk about it, but until you're there and experiencing it, you really can't, understand it.
Yeah, I mean, in fact, I kind of regret that I never did that in the United States, because it would just because Congress is really important, and I feel I've learned a lot over the years. Just I live in DC. I mean, I just have acquired a lot of knowledge just sort of secondhand. But
right,
there is something to be said for really understanding how a legislator engages with the electorate, what they have to do to get votes, what sort of constituent services they do. I mean, all of that. I mean, there's real value in understanding democracy, really at the shoe leather democracy,
right.
Not just, at the 50,000 foot level.
All right. So walk us through the rest of your career and how it kind of develops into this prolific writer.
Yeah. So it actually, I mean, in some ways over the long term, the thing that maybe I got most out of that year was that I started blogging while I was there. And it was just, I wanted to keep writing while I was, at that point I had assumed at some point I'd go, and actually was assuming I was going to get a PhD. And so wanted just to keep writing and almost just kind of keep a diary of what I was seeing. And I was reading multiple Japanese newspapers every day. I was, just like there in the thick of it. And so it was just started blogging about what I was watching, and eventually people found it. And so then I realized I was writing for an audience and started doing some freelance writing. So really then just started writing about Japanese politics. And
along the way you've written a book.
That took a while to get there, but yeah, eventually.
Yeah.
But then, so I did actually start the PhD, was then really just doing more academic work on Japan.
Yeah.
Did not finish, and then wound up in the political risk business for a company called Teneo, just as sort of the Japan watcher, talking to, hedge funds, institutional investors about Japan. And this was, that was in 2013 at, sort of as the first Abenomics boom really took off. Right. And so there was a real need, a real interest. And at that point on really just became kind of an Abe and Abenomics watcher. And that's what led to the book, really, because I was, so immersed in understanding Abe, what he was doing, what his government was doing, and, really reading about him and his past. And at some point realized, I've done all this work. No one's really written about a biography of someone who is actually turning out to be really an important figure, and decided, okay, fine, I'll do it. I'll write the book that really should be written about him.
Okay. All right. So let's talk a little bit about Japan, and maybe we could start with Abe, because I think a lot of people that have been around in the markets for a while will remember that initial change in kind of policy. And it's kind of funny now to think about, at that point, the yen was too strong. And it's kind of makes me laugh, because it was too strong. And kind of, maybe if you could you kind of just put, in terms of the finance, talk about how the financial arrangements in Japan, like maybe how the macro is evolved, and then how kind of the political figures have been woven into there.
Okay, that's it. That's a big question.
Yeah.
So Abe, he had been prime minister 2006, 2007, actually the year I was there working. So that was also part of the, I got to watch that sort of his rise and fall, and what I thought was the end of his career in 2007. So he comes back in 2012, leader of the LDP. And I think the place to start with that is you have an LDP that had been driven from power in 2009. Really, I mean, the second time it had gone into opposition before, but really the first time it had ever really been swept from power. It was not the first time it was not the largest party in the Diet. I mean, just 2009, just like completely obliterated, in ways that almost unthinkable. And so the party,
and for those, I don't mean to interrupt, but I'm a complete neophyte when it comes to a lot of Japanese politics. The LDP, obviously, I know the party and it's a big party, but maybe could you equate it to something in terms of like, would they be left, right? Where would they? How would you describe a centrist? Where, how would you describe the party?
I mean, it's such a big party and it's such a national party. It represents so many different types of places in Japan. And so it really spans anywhere from the center to right wing. And
so center, center right.
It is a conservative party. They think of themselves as a conservative party, but I mean, conservative means different things in different places, and it means different things to different politicians. I mean, Abe called himself a conservative, Ishiba calls himself a conservative, but it means very different things. And I could spend a lot of time.
No. I just wanted just a big kind of picture, like where they stand. Okay, so he comes back in 2012. You were setting telling us what happened in 2012.
Yeah, so the LDP had been out. It was in opposition. They were looking for a way back. Abe, meanwhile, had been written off in 2007. He had been forced to resign as prime minister. He's looking for a way to make a comeback. He does make a comeback, and the key to his comeback is reflationism. He had always been someone, economic policy was an afterthought for him. The first time he was prime minister, he was just someone this was not an issue that he cared about. He was much more interested in national security and sort of conservative kind of cultural issues, social issues. And while he was sort of in his personal wilderness period, realized voters care the most about the economy. So if I don't have a good answer on this, I'm never going to be taken seriously again. I'm never going to come back. 2, the LDP's got to find a way back into power, and we have to have a message that resonates. Well, you have this party, Democratic Party of Japan, they came in, they messed things up. So we have an opportunity here to really offer something different. And so the thing he hit on was, we've been in the doldrums for decades. We've had deflation, we've had just sort of low confidence, the yen is too strong. All of this is sapping, essentially enervating the country. We've lost our energy. We are sliding down the international rankings and everything. We're going to be, everyone's going to overlook us. We're not going to be a world power anymore. And I think that the key word to understand Abe and his part of the LDP, sort of the more right-wing part of the LDP, is they are just absolutely fixated on the idea of national power and Japan's relative status, where it ranks. Obviously watching China pass Japan was stressful, but also around the same time Korea was really starting to pass Japan, and I think that was a source of angst. I mean, you're just really concerned about Japan's status in the world, and so reflation and this economic program that became Abenomics really was the key to Abe's personal comeback, to the LDP taking power, and then also to making Japan relevant again, to making Japan, very early and after he came back to the premiership in 2013, he goes to Washington, D.C., gives a speech and says, Japan will never be a second tier country. We will always be a great power. And that was his ambition. And, he sort of belatedly realized that getting economic policy right was the way that had to happen. That if he didn't have an answer to what ailed Japan, that it would not work.
Okay, so why don't we talk about that policy? What am I right? He was the 3 prongs.
He was the 3 arrows. Yeah.
Oh, so 3 arrows.
3 arrows
sorry,
of Abenomics. Yeah.
Yeah. So what can you talk about those 3 arrows and explain to people, and then maybe we could go and kind of assess how they worked.
Yeah, well, it's. I mean, I think we actually have to talk about them because here we are. It's been 12 years since Abe came back and rolled out Abenomics, and those policies are incredibly sticky. And I think, and this is the fact that every politician in Japan has to grapple with. I mean, even now you have a prime minister who during Abe's tenure was the leading opponent of Abenomics and constantly criticized it. Even Ishiba now, I think, has discovered how sticky this stuff is. It is not, like it is not something that can just be tossed off. So first, of course, I mean, the biggest change, and I think the thing that, you know, people in the markets care about most was the first arrow, which was, you know, regime change at the BOJ. You know, the BOJ had been had this deflationary bias. You had leadership that did not want to aggressively attack inflation or attack deflation and really get prices up and really get the economy moving. And so you had a determination from Abe, you know, that he was going to push the BOJ to change directions, you know, to really expand the monetary supply, to introduce a higher inflation target. And that's what you ended up getting. You ended up getting a 2% inflation target, and you ended up getting new leadership, you know, driving out Shirakawa before his term ended, getting Kuroda in there, and getting a BOJ that was really committed to ultimately, you know, some pretty radical policies to try to get inflation up. And of course, it was supposed to take only 2 years, and it did not take only 2 years. But, you know, just the, you know, to go back from, you know, a term in some of the literature that they were drawing on, you know, that the economists who were advising him were drawing on, but this idea of, you know, Rooseveltian resolve, that you have to be willing to constantly experiment, to try different things. And, you know, so they, you know, first it's, you know, first it's QQE, and then it's negative rates, and then it's yield curve control, and, you know, constantly trying new tools to push inflation up. And so that was the first arrow. Should we pause there before we?
No, let's keep going. No. I think you got it great, and just keep going. You're on a roll. So let's explain the second arrow. So
then the second arrow, there were a few different terms. I think, you know, flexible fiscal policy is probably the way it's described.
Okay.
There's a lot of nuance to it, because when Abe took office in 2012, he inherited a plan to raise consumption taxes. And so it ended up in practice looking like stop-start fiscal policy. But I actually would argue that there really was a bias in a fiscally dovish direction. And, you know, that ultimately, you know, Abe was sort of stuck with this plan to raise consumption taxes. And so they ended up doing that fairly early on in 2014. And of course, it caused a recession. And Abe's response to that was, well, I'm not doing that again. And so there was supposed to be a second tax hike that got pushed back to all the way to 2019. And in the meantime, you got a lot of fiscal stimulus over and over again. And what ended up happening too, and I think a consequence that the LDP is living with now, and really what Japan's politics is living with now, is that the LDP shifted from a party that had actually campaigned on tax hikes and fiscal discipline, has now become an extremely dovish party, and a party where the right wing of the party, so the people sort of who were very close to Abe, are essentially now believers in modern monetary theory. I mean, and I don't even say that. I mean, literally, if you look, like when Stephanie Kelton goes to Japan, if you look at the people she's meeting with LDP right wingers. She's not meeting with left wing people. She's meeting with the right wing of the LDP. And ultimately, it comes down to these questions of national power and national strength, because they want to raise defense spending, and they don't want to have to wait around for, you know, tax increases or other spending cuts to do it. They want defense spending to go up now. And so if you want more defense spending, you have to kind of accept that there's going to be some deficit spending. And well, how do you get deficit spending? Well, deficits don't matter. You know, the BOJ is buying all of our debt anyway. We don't have to worry about it. And so the biggest adherents of modern monetary theory in Japan are on the right wing of the LDP. It is not the left wing. It is a right wing thing. And so I think there are people in the LDP now who would like to unwind the second arrow. I mean, if we think of the second arrow less in terms of what Abe said it was and more in terms of its effects were to make the LDP a much more fiscally dovish party. And so now there are people in the LDP who want to move back in the direction of, you know, fiscal discipline, sort of the Ministry of Finance view of things. The deficits are unsustainable. You know, interest rates are going up. We have to get things under control. But I think again, this is very sticky. It is very hard to move back in that direction. And Ishiba, you know, talks about wanting to raise taxes. He's going to have a real fight on his hands. And we could talk about that maybe a little later in the hour. But that's the second arrow. The third arrow is probably the least understood, in part because I think, you know, the kind of things that Abe was saying to international audiences about it was there's a lot of marketing, so he went, to the city of London, he went to New York, he talked to finance people and was always talking about, it's regulatory reform and we're going to liberate market forces and we're going to deregulate and we're going to create these special economic zones and regulatory sandboxes and all of this. Ultimately, though, I think, and people, I argue with people about this. I don't know if this is necessarily the consensus view on it, but I think it's pretty well, there's plenty of support for this. And that is that the third arrow ultimately was state-led growth, figuring out how to use whatever levers the Japanese state had to move economic activity into higher value added sectors, higher productivity sectors, really trying to, support advanced technology, development of advanced technology. And there were a lot of different tools to do that, but I don't think anyone should think of it as, oh, this is, neoliberal reform. We're going to just let markets do their thing. No, this was, we're going to use, and I think, corporate governance was part of this.
But there was an industrial policy aspect to it.
It was absolutely in a tradition of, something, again, that Japan has a long history of doing. But the idea that, this is not, the Japanese state's going to get out of the way and release animal spirits. This is, if we want to grow and if we want to be a power and if we want market share in the sectors of the future, well, we have to put our hand on the scale and really try to channel resources in new directions. And that's how I interpret it. I think ultimately, and again, I think there's a lot of support for this, that in his inclinations, Abe was not a neoliberal. Abe was a statist, and he comes from his grandfather. And I almost don't want to go down that rabbit hole. His grandfather was a notorious / famous economic planner during the war and in Manchuria when during the Empire of Japan, as prime minister after the war, was very much an advocate for using, state resources to guide Japan's reconstruction and development. So this, he comes by it honestly. This is not this. It makes a lot of sense that this is how he thought of things.
Can I just jump in with a question here? I've heard you say a couple of times this national power and how important it is to them. Is that just the Abe party, or is it or are all Japanese politicians kind of on that same page that they have to ensure that Japan stays a dominant power?
And so I think actually for a lot of Japanese, I think they were very uncomfortable actually with a lot of what Abe wanted to do. And in fact,
so it's not, so that is something specific to him and that party. And it's not something that they feel great about.
Yeah. I mean, and in fact, there was always, when he was assassinated, he died, and you had all these international tributes, coming in about Abe as a statesman and how, loved he was around the world by other leaders. And, U.S. flags were flown half-mast when he died, which is, there were points in time in his career where that kind of thing would be absolutely unthinkable. Like, you just like could not even conceive of it. And, but if you look at the domestic reaction when he died, there was a majority of the public felt that the national treasury should not pay for a state funeral for him. He was a very controversial figure, and some of it was just how he governed, but how he governed was, Japan needs to be a great power. I will do whatever it takes to do that. I have the answers. And if that means kind of running roughshod over my opponents, I'm going to do that because I think this needs to be done. And generally, Japanese democracy has not always been majoritarian, where, if you have the votes, you can do whatever you want. It has generally been more consensual, more, you bring in the minority views. You have, you're not going to push too hard to, even if you have the votes, you have to kind of bring everyone on board. That was not how he governed, because ultimately he was a man in a hurry who had things to do and was not going to let, the media, was not going to let his domestic critics stand in the way.
Okay.
And
that's an aspect I did not understand at all. I had no clue about. So now, how did this end up working? And let's just take that kind of forward in terms of how it developed after him and how we've reached to where we are now.
Yeah, well, so he governed longer than any prime minister ever has. He made it until 2020, and then finally during COVID, his government was having issues managing it, and then his health turned against him, and so he resigns. And that was not the end of his influence, though. So he resigns in 2020. His chief lieutenant ends up becoming prime minister after him, continues his policies for another year until he says he's not going to run for the leadership anymore. Then you get Prime Minister Kishida in 2021. And, Kishida, when he becomes prime minister in 2021, there's a few conflicting impulses. So on the one hand, Kishida is from a different part of the LDP than Abe, even though he was Abe's foreign minister. Sort of a kindler, gentler sort of figure, he comes into power. He says, I want to listen more. Abe wasn't a great listener. I want to listen more. I want to be more of a consensus builder. He says he wants to build a new form of Japanese capitalism that's a little more equitable. It wants to talks about, tax increases, and transfers and trying to make the system a little fairer.
Okay.
In practice, though, he ends up, the only way he wins in 2021 is because he had Abe's support, ultimately.
Okay.
Abe kind of saw him as someone who would carry his legacy forward, but would sort of put a kinder face on it. And, which in some ways is exactly what ended up happening. So Kishida is supported by Abe and brings a lot of his policies forward. And so you end up getting, monetary easing continues more or less, and obviously we're in sort of a transition period, but they're not racing to unwind it. You have basically a continuation of a similar approach to fiscal policy, where Kishida now he started talking about smart spending, and yes, eventually we have to think about fiscal discipline, but let's not move too quickly to do that.
Okay,
and I think the kind of industrial policy characteristics of the third arrow essentially became a lot clearer during this period, where Kishida starts talking about a digital transformation and a green transformation, and it becomes clear, okay, the sectors that we really want to focus our efforts in now, digital technology, software, some advanced manufacturing now, and a real effort to build the semiconductor industry again in Japan, and then also decarbonization and clean energy. And that was something actually that started under Suga and then continued under Kishida. Okay. But ultimately, this is basically Abenomics by another name. It is a similar sort of policy agenda. It carries forward, and Kishida. But I guess the other cross-cutting issue with his dependence on Abe is that he ended up with a lot of Abe's political baggage, and that really is what ended up dragging him down. So Abe is assassinated in the summer of 2022. Immediately afterwards, you get this scandal that emerges because of the reason why he was assassinated, for his relationship with the Unification Church, better known as the Moonies around the world. And suddenly it is revealed that the LDP is riddled with ties with the Unification Church, which is, has been branded this anti-social organization in Japan that has exploited people, that's taken their money. And so, in the wake of the assassination, this becomes a major scandal for the LDP. Kishida has to sort of clean house and get rid of a bunch of these people, but it really hurts his popularity, which never really fully recovered, maybe with a few brief exceptions. And then he's still dependent on Abe's faction, even after Abe passes away. And late last year, he gets embroiled. The LDP is embroiled in the scandal when it appears that Abe's faction was basically engaged in this massive effort to hide political funds that had been raised and were transferred to its members, and basically like massive systematic ethical violations, if not outright law breaking. Right. And Kishida is, of course, it wasn't him personally implicated, but he's left having to clean up the mess from this part of the party that he needed in order to govern. And so was sort of pulled in different directions. He tried to take bold steps, then he tried to compromise. Then, he ended up just looking very wishy-washy and kind of behind the curve on it. And that ultimately is why he ended up not being able to seek another term at the head of the LDP. So now here we are.
1 second before we go on, sure. Can I ask who made the decision? There's been a change in terms of attitudes in terms of equities and I think this is something that's very important to many people who are listening. There's kind of this whole, you have to, if you're trading below book, you're going to get kicked off the exchange and stuff like that. Which leader was in charge of that, and how did that kind of play into this kind of political brouhaha?
Well, that agenda really started under Abe, where you really had, and part of, because it was sort of baked into the first era that if you're going to get inflation up, well, and people, you better be moving off, out of cash into assets that are going to, appreciate. So, and this had a lot of different dimensions to it, right? Corporate governance reform started then. So you got a first corporate governance code, to really get, corporate managers to focus on ROE and other metrics. And, the Tokyo Stock Exchange is a partner in that. You got a stewardship code to try to get, pension funds, starting with the GPIF, right? Like the, daddy of all the pension funds,
right?
You had a serious effort led by the Abe government to reform GPIF governance and to really get the GPIF moving out of, low yield, move them out of bonds, put them in, get them out of JGBs and get them into both domestic and foreign equities and other risk assets, and really being able to take on more risk onto their portfolio. So all of that really started during the Abe years, and sort of.
But it's gotten more aggressive over the last couple of years, as a not? Am I mistaken?
Well, yeah. So then under Suga and under Kishida, they really picked that up. They really kept the pressure up on the corporate governance side, and Kishida's kind of innovation in this agenda was, there's really been a sustained push to get kind of small retail investors really. You have households sitting on all these savings, massive amounts of cash savings to help them have more of a risk appetite. Really,
is he the architect of that NISA account or NISA account?
So that started under Abe as well, but then the expansion at the start of this year was really a Kishida government. Again, so it's a lot of making it a little more sophisticated, building on what had come before, but this did not come out of nowhere. All of this had, antecedents during the Abe years.
I'm curious, when you talk to, I guess, how do I phrase this? What is the attitude amongst the Japanese public and the Japanese business community about those changes, those kind of pro-capitalist or not even pro-capitalist, pro-market reforms that we over here think it's great? Oh, it's terrific. Finally, they're going to start, caring about what shareholders, actually believe and start working about those things. And we think it's terrific, but do they also view it as good, or do they take it with a little bit more skepticism?
I think, just to put it a little simply, that, that I think, Japanese capitalism, for most of the post-war era, that if we think of the system sort of having three major participants, owners, managers, and labor, essentially it worked as a partnership between workers and managers, right?
Okay.
And like that was, so workers and managers, ensuring that there was labor peace, that you had sort of stakeholder capitalism, that you were focused on sort of long-term growth, long-term kind of strategy for the firm. And therefore, you would depend on banks for your capital. You had cross shareholding, you're part of a group, and you had sort of a pact between between managers and labor that allow lifetime employment, seniority pay, just sort of keeping things stable. And in exchange, workers didn't make too much fuss for managers, and everyone just sort of accepted that. But that also meant that returns were not necessarily what shareholders were going to want. But shareholders, they were like, you go over here, you're like, we're not listening to the owners of capital,
right?
Or because oftentimes the owners of capital were, the bank that you were lending from and the firms that were part of your consortium. So, and they certainly weren't, for the most part, foreign, right?
Yeah.
And so it's, how do you unwind that and move to a system where, actually, like, where maybe, and what I think has happened both as part of Abenomics and then carrying forward has been almost more of a government facilitated partnership between the owners of capital and labor, because that you had workers looking at the managers saying, "Oh, you're sitting on these giant cash holdings. Our wages haven't gone up. Our real wages haven't gone up in decades. What are you doing?" And meanwhile, the owners of capital saying, "Hold on a second. Like you're not doing anything that's getting us growing. Like we want to see some returns here. We want to see some dividends." And of course, the government has been behind that, trying to push, to get firms both to pay more in wages and then also to focus on higher returns and dividends and really, really making productive investments. And it's harder because the LDP has governed, of course, as a friend of big business, right? I mean, like it is, you have sort of a corporatist relationship and this is not, an adversarial relationship, that this is, is a consultative relationship. And so the LDP has had to work hand in hand with business. It has had to try to find ways to incentivize businesses to pay more in wages and to embrace corporate reforms and to give shareholders more of a seat at the table. But it's also for that reason that I think, it's not that I think corporate governance reforms haven't been legitimate or haven't been moving things in a new direction, but this has not been the arrival of shareholder value above all in Japan. This has been, okay, it would be good if you, the managers, listened a little more to your shareholders when it came to thinking about returns on equity, returns on investment, thinking about the long-term future of your companies. It would be good if you sat down and talked with labor and, we want inflation to go up. We want incomes to go up. You have to be our partners in that. But ultimately it has been very difficult, I think, for the LDP to get things out of the business community that the business community hasn't wanted to do itself. And I think that, so that, I've maybe oversimplified a little bit, but I think giving you sort of the big picture of Japanese political economy, that ultimately is the landscape that corporate governance reform is trying to fit into.
Yeah, no, I think it's perfect. Actually, when you were mentioning that, one of the things that popped up to my mind is our friend Louis Vincent Gave, and he has this line. I think it's his, but maybe it's not. But he says, "But remember, the tragedy of Asia is that Japan is a profoundly socialist country on which capitalism was imposed, and while China is a profoundly capitalist country on which socialism was imposed." Do you? It is a little bitty and funny, but do you understand where he's coming from, and is there any validity to that comment?
I mean, it's a little. It's probably overstated. I mean, the Chinese description, I think, is absolutely right.
Yeah.
I mean, I think, there's the definitely, because you look at like Chinese who are not living under the rule of the Chinese Communist Party are traders and entrepreneurs. I mean, it's,
they compete down to the price of zero on every single thing that they do. Like the margin is going to go to zero.
So I think that part of it is absolutely true. On the Japanese side, I wouldn't say they're necessarily socialist. I think there's a communitarianism to it.
Okay.
And a which is where I think sort of the stakeholder part of it comes in, that there's that there's an expectation that you're sort of not leaving people behind.
Right.
And,
okay.
Which doesn't necessarily, yes. And that Chalmers Johnson, the political scientist, famously said, I think, the LDP is the world's most successful socialist party. And there's, it's kind of tongue in cheek. Is it actually, like the LDP, it's hard to think of it as strictly as a socialist party, but look, it is certainly, as I talked about Abe, sort of having these statist inclinations. There's absolutely a developmentalist statist attitude. It is there's definitely an expectation of, working towards cooperation with different players in the system, and that and a disinclination to just let's let the market do its thing and
fair enough.
What they may.
It's Japanese capitalism. It's not the same as ours.
Yeah, I mean, I think they're capitalists. They have, look, I don't think you can look at how they grew after World War II. That wasn't just a miracle of the state. That was, the entrepreneurial energies of the Japanese people. And, Sony, Toyota, these companies were not creations of the state. I mean, they were the result of kind of entrepreneurial energy. And the question is, how do you liberate those forces again?
Okay. And on that note, am I correct? I've heard from a couple of people have been telling me that have studied Japan for a while and have been there, and they say the energy you feel when you go there is completely different than the energy of a decade ago. Young people are optimistic about the future. They're starting businesses. They're doing things. There's things happening that it has definitely changed.
I think that's absolutely true. I think, and there's a lot of bottom up change happening. Some of it has been sort of encouraged and nudged along by the government, but there's a lot happening. Young workers are voting with their feet in a lot of ways, where, for a long time, the expectation was, you leave school, you get a job, you stay in that job until retirement.
Right.
And that social contract is breaking down, and that businesses don't feel able to offer that, that sort of social contract,
right?
In the same way, but also workers aren't expecting that anymore, and they've learned not to expect that. And part of that is just as a consequence of what they call the lost decades, where a lot of Japanese firms did turn to what they call non-regular employment, temps, part-time workers, people who were yes, you still had people who were leaving school and were getting the lifetime employment guarantees, but they were shrinking as a portion of the labor force. And so people aren't expecting that anymore. So even people who get those stable, regular jobs with good benefits and things like that, they're leaving 3, 4, 5 years later. They might change jobs a few times.
The workforce is getting more dynamic. Business in general is getting more dynamic.
Business is getting more dynamic. There's a mid-career labor market in a way that you did not see a decade ago.
Okay.
That there is an expectation that if you decide to change jobs, that there's a way to do that. And then there is there's a supply of workers for that, and there is a demand for workers for that. The anecdote that I always hear when I go back is, and I know I've got friends in academia, and, I kind of hear what students at elite universities are doing. And, not too long ago, the expectation was you leave school, maybe you go work for a big company, or you go into the bureaucracy. If you're at Tokyo University, you're at one of these top schools. And now the dream is, you go work for a foreign company for a little while, at least, you go work for a startup, there's greater diversification in the paths that people are taking. And
that's great news.
Yeah, no. And actually, I would say that it's even visible in the politics now, in that, so like right now, like we're, 10 days out from a general election, and every time a general election rolls around, because I'm a bit of an obsessive, I try to go through each electoral district and really try to come up with a forecast and, just try to get a feel for what's different about this election. And the thing that I am noticing, and I don't know how many of these candidates are going to win, but there are a lot of younger people running.
Oh, that's interesting.
I'm just seeing people in their 20s, people in their 30s, and a lot of these are running for opposition parties. They might not have particularly strong chances of winning, but
they'll be there the next time. They're getting some experience, and
they're taking an interest in national affairs, which I think the sort of line about Japanese politics for a while. Young people don't vote, young people don't express an interest, and maybe for the most part, young people aren't going to vote again, but the fact that you have all these young people running for office, they feel a stake in how their country is governed. They want the country to be less of a gerontocracy. We saw it during the LDP leadership election. You had 43-year-old Koizumi Shinjiro running for office. You had 49-year-old Kobayashi Takayuki running for office. You're getting a younger generation that does feel like it's time for their voices to be heard, that it's their future and that they want to shape the country they're going to live in.
All right. So you mentioned the election that's coming up, and we also, I want to bring this back to markets, and maybe you could put those two together in terms of what's going to happen with the election and what the issues are from a kind of markets perspective. Because if I'm not mistaken, the weekend was good to a point, and it actually hit a point that was not so good, and it actually ended up being kind of a negative. And I was just kind of curious I guess, walk us through what you think is going to happen with the election and how that'll affect markets in terms of what they priced in. And we'll go from there.
Okay. So you have the key fact about this election is that you have a new prime minister, right? So we have Ishiba Shigeru, who won the LDP's leadership at the end of September and immediately, went to call an election faster than anyone ever had before, because realizing that to do anything, he needs a new mandate, because the LDP, as I mentioned earlier in the hour, they've been dealing with this corruption scandal. The public has really lost faith in the LDP and how the LDP is governed. And so first and foremost,
one second, can I just interrupt again? I'm sorry. Sure. Again. I feel like a complete idiot because I don't even know. Is it a parliamentary system kind of similar to the British? And like, I'm Canadian, so we have a Canadian that's modeled after the British. Is it similar to that?
So on the whole, it is. It's a little different in that, unlike the pure Westminster system, Japan actually has a mixed system where, so the most of the lower house, that's what's up for election. They're elected from single member constituencies that are first past the post, and then there's a portion though that is elected through proportional representation. So it's this mixed system. The effect of that is that the proportional part of the system means you actually do have a lot of sort of smaller parties that kind of hang around. They don't have a lot of seats, but it ensures that they're there. That if you want to vote for, there's
like a Green Party or something, or
you want to be, you want to vote for the Communist Party, you have an opportunity to vote for the Communist Party.
Fair enough. Okay, sorry to interrupt. I just wanted to understand. Okay,
no.
Keep going.
So you have a new LDP prime minister who first and foremost needs to have the public behind him. And so he, goes immediately, calls a snap election, a year before sort of the 4-year diet term was supposed to end. And so the election, first and foremost, is, can the LDP clean itself up? Can it be a vehicle for political reform? Can voters still trust the LDP to govern the country? And that I think has, it is the issue above all else. And, Ishiba is, he's been in politics for a long time. He had run for the LDP's leadership for 4 times before. If there's one issue that he has cared about more than anything else, I mean, he's a defense policy wonk. He's not known as like an economic policy guy. So he cares about defense, and he cares about sort of clean politics and the quality of Japan's democracy. It's something he has cared about more than anything else. And it is a big part of why he won. That I think the LDP reasoned, well, we've got to repair our reputation with the public. Let's go to the guy who's been talking about these issues for a long time. He's been very popular with people for a long time. Let's give him a shot. And so on his 5th try, he wins.
Okay.
And so in practice, though, it is turning out that he has not necessarily gotten sort of a big bump in support that I think the LDP had hoped. Okay. And this is looking like a very competitive election, much more competitive than we've seen really at any point since the LDP returned from opposition in 2012. And so I don't think we're in a position where there's going to be a change of government. The LDP is still a pretty strong party. There's still a lot of places where there's basically no competition for it. But it's not going to take a lot of seats for the LDP to have a harder time governing. So if we're looking at, I think, at least a floor of somewhere between 20 and 25 seats minimum that the party is going to lose. And that, and so as you start getting beyond that threshold, it is going to get progressively harder for Ishiba to manage the diet. So basically to control the committees, to move legislation through the committees. He already has a coalition partner, this centrist Buddhist party called Komeito. Komeito will have more leverage. That's probably less of an issue, really. Where it does get messy for Ishiba, though, is that if you look at the margins by which he won the LDP's leadership, he won by, let me think about this. He won by 21 votes, I think was his margin of victory. Okay. And he defeated a right-wing candidate, Takaichi Sanai, who's one of Abe's lieutenants. And if anything, she's even more committed to, I mean, her campaign slogan was basically national power or increasing national power. I mean, she made it very explicit what she was about. She basically is committed to modern monetary theory. Like, she does not think deficits matter. She was campaigning on basically leaning on the BOJ to reverse course and to go back to straight monetary easing. Was campaigning on major deficit spending for defense. And they're a big part of the party. And so anything that Ishiba wanted to do on his agenda, so maybe moving in the direction of maybe a little more fiscal discipline, letting the BOJ do its thing, trying to really clean up the LDP, reform the party, considering that some of the more corrupt parts of the party happen to be the people who voted for Takaichi. You have this very divided party that is going to make it very difficult for Ishiba to move the direction that he wants to do. And so depending on how he comes out of this election, so one, if the LDP loses a bunch of seats, he's going to be in a situation where to govern, he's going to have to rely on this part of the party that doesn't like him very much, unless those losses are entirely concentrated in the part of the party that didn't vote for him. In which case, maybe things look a little better. He can say, look, we've cleaned out the corrupt parts. Right. Now I'm in a position to really get maybe a little more of what I want. That it's still going to be hard if he's got a smaller majority though. And he's got upper house elections next year. And if things aren't going well for him, those elections could go badly for him. So the fact is that I think for the next year, pivoting to the economic policy side of this, he is in a position where he needs to be politically stable. He needs to know that he has control of the LDP. He has control of the diet. He has the public behind him. And as a result, you're going to get a lot of continuity. The other part that I should mention is that to win, he needed Kishida's support. Kishida's support actually probably made the difference in his victory. And so he has said, I'm going to continue the policies that Kishida was doing. Like basically everything Kishida is doing, I'm going to do it. And in fact, I've been jokingly telling people, when I talk to my clients, I say, that for the time being, this is a Kishiba cabinet. This is a cabinet that is carrying forward, all the, basically like sort of that kindler, gentler Abenomics that Kishida was doing. Kishiba has said he's going to continue all of that. All of that is going forward. So you're not going to see a big change on the monetary side. You're not going to see a big change on the fiscal side. You're certainly not going to see a big change with, the green transformation agenda, the digital transformation agenda. All of that is going to carry forward under Ishiba.
Okay. One of the things actually, when it comes to the monetary side, why are we even discussing the government? Do they have that much control over the BOJ?
So I think, in statutory terms, the BOJ is independent. In practice, I think what we saw during the Abe years was a respect for the BOJ's de jure independence. But in practice, was its de facto independence preserved?
So would you make the statement that the independence of the Federal Reserve is a lot stronger than the BOJ?
At the moment, sure. Absolutely.
Oh, at the moment.
At the moment, sure. We'll see what happens on November 5th. But
we won't even go there.
Let's not get derailed by that.
But they definitely, by the sounds of it, they are more susceptible to jawboning from the is it overt? Is it behind closed doors? How does it occur?
So I think what we have seen, we've seen overt, we've seen, behind closed doors, and then it kind of leaks after the fact.
Right.
There's, just some political, just kind of reading the political winds on the part of the BOJ itself and sort of trying to not get too out of step, with the political authorities. Ostensibly, you do have the accord between the BOJ and the government dating back to 2013, that the BOJ is committed to, 2% inflation. And so they have not replaced that. And Ishiba, I think Ishiba is too much of an institutionalist and generally, was too much of a critic of how Abe ran, kind of what he was trying to do, that I don't think he would, there was some question after he took office and said some maybe impolitic things about the BOJ and about monetary policy that led to a bit of a reaction. I don't think he's going to lean very heavily on the BOJ. If Ueda says, look, the data says that we have room to raise rates, that monetary policy is still, pretty loose. I don't think Ishiba is going to stand in the way for that. Had Takaichi won, she was, and she said over and over again during the campaign that the BOJ is being stupid, that, we are not at a point where inflation is sustainable, and they're going to kill what we've achieved already.
Okay.
And, I think she would have really leaned on the BOJ to, at the very least, not raise rates again. And I don't know, maybe she would have leaned on them to revise what they were going to do as far as asset purchases. I don't know. Right. I mean, I'm not sure exactly what she had in mind. But there would have been a lot of pressure from the government on the BOJ. Ishiba is not going to do that. And so that depends too. So ultimately we are, what does Ueda really think about what the data says? What does the global economy look like? What does the US outlook look like? What does China look like? I think that is going to be what to watch, ahead of December and then going forward. I don't think Ishiba is going to be, really, inclined to intervene dramatically with monetary policy.
One of the kind of financial historians that I have a lot of respect for is a fellow by the name of Russell Napier. And he argues that eventually what will need to be done in Japan is for the money to have to come back. That's like, because the Japanese are one of the biggest savers, if not the biggest saving nation out there in terms of their capital is out in the US and out in France and all these different places. And they're going to have to bring it back to basically to do financial repression, meaning that they'll be forced to buy the bonds that will be higher in rates. I know this is a lot of kind of like, it's a theory and stuff like that. I was just wondering maybe if you could talk about, is there any chatter about financial, like they're not going to obviously say financial repression, but changes in attitude about potential changes at the GPIF or potential changes in terms of how their savings could be used better at home and how that might even help the currency in a lot of different ways. It does solve some problems if they start bringing that capital back to Japan.
I mean, it's really, I don't even know what monetary value question you would put on it. I mean, it is an enormously important question because ultimately what happened, during the Abe years was a lot of unwinding of financial repression, right? Pushing the BOJ, the GPIF to move, in some ways making the BOJ as sort of the buyer, of bonds of last resort so that all of these pension funds and, they could all move into riskier assets. Right. And
100%. It
is a question that that was sort of lurking in the background during the Abe years. They're like, all right, if this works, well, what happens? Like, what are you going to do with all of this? I mean, is the BOJ just going to sit on it on the JGBs and sort of, until maturity and like, that's it. And then you just, but I don't know if there's really a really good answer for it. Of course, if you ask the fiscal hawks, the answer is we have to spend less and we have to, run smaller deficits. I suspect some of what will happen will be, insurers and, pension funds, will maybe move back into JGBs also just because as they need, as you get more people moving into retirement and sort of, now starting to draw on those savings, wanting to have kind of more stable assets that they're, that they're drawing on, to pay, for those payouts. So I mean, I suspect for at least some, for some funds, moving back into sort of a, financial repression kind of environment, might be the answer. I don't know if we'll see it with the GPIF because, part of what happened, it wasn't just portfolio rebalancing by the GPIF. It was really professionalizing the GPIF, making its, really changing its governance structure. So, you basically had like bureaucrats who were running it, until 2014, 2015. And they really changed the institution to make it a much more professional institution. And so I don't think there's going back to that. I don't think they're just going to say, oh, well, you're telling us to do that, so I guess we're going to do that. I think that's going to be a harder sell.
And even if it happens, it's going to be over a long, long period.
Yeah.
It's not something that's going to occur. One of the things I mentioned earlier was the fact that the currency was an election issue. Could you kind of talk about, or at least if I'm not mistaken, it was an election issue, or at least people were frustrated with how weak it has become. I would love to know your attitude about like how much that's affecting politics, and whether we as currency traders should be like thinking about that as kind of one of the variables we should kind of incorporate when we're forecasting.
Yeah. I mean, so I think discontent with the cost of living implications of, the yen around 160 or so. I mean, I think that was a real factor in Kishida's inability to really get traction with the public. Things kind of got bad, and I think there were just a lot of frustrations that then kind of, like, oh, you just did, like, had this sort of like bundle of frustrations. And one of the threads in that was, wow, everything costs more. We're overrun by tourists. I can't go, I can't take a nice vacation abroad because, my God, have you seen what it costs to get a hotel, with the yen,
Yeah.
and what it was. And I think people really felt that, they felt, of course you had all these years of pursuing inflation, and finally you get it, but it's also thanks to, food and energy, just being more expensive. And so, it's, this unusual situation of, we're trying to get inflation, but meanwhile we need sort of stimulus packages to relieve households that are dealing with, the higher cost of everything. It's like,
right.
Weren't you trying to do that?
Yeah.
So it was definitely, it's definitely a source of discontent. I think since July, with the yen now, in the sort of 140s, there's been, I think, a little less of that. I think it's taken some of the pressure off.
Okay.
But clearly we're in a world where, given where Japanese companies are producing and where they're exporting from, the boon to Japan's economy from the weak yen is not what it was. They are producing in, offshore now, and they are not necessarily bringing, that manufacturing back to Japan. Anecdotally, you hear a lot about that, and a lot about more investment at home, and, investment is up. Relatively speaking, we're still not seeing fundamental changes in where Japanese companies are producing. They still want to have, these sort of lengthy supply chains.
Right.
They're still investing in Southeast Asia. They're still in China, obviously, less maybe with new investment, but still with existing investments. They're in India more. They're in the United States. All of that matters. And so you're just not getting that same stimulus effect from having a weaker yen. And right. I think that's the reality that everyone's had to wrap their minds around. That the downsides are much bigger than the benefits for big companies.
Fair enough. When you talk to hedge funds and other kind of market participants about Japan, what do you think they're getting wrong the most, or where are they most kind of have views that aren't correct in terms of their assumptions?
I mean, I can't say I've seen anything really like egregiously.
Yeah, but like just wrong. In general, like what is, let's just start with this. I see that a lot of, like 0.72 is opening up and making some of their analysts come to Japan, and they're starting offices there. PE shops are coming increasingly to Japan. There is a newfound kind of optimism regarding financial markets in Japan. Is that well placed, and will it continue? And where do you think that they might be? What advice would you give those people coming to Japan?
Well, I think it actually goes back to something we talked about earlier when we were talking about kind of how what is Japanese capitalism and how is it changing, and I think really appreciating that. Yes, the shareholders might have more of a voice. Yes, there might be maybe a little more room for private equity, for hostile takeovers. But clearly, I mean, this is not, Japan has not opened the doors to anyone and everyone. That this is still, corporate managers still have the upper hand. That big business is still politically powerful. They still have, even as cross shareholding has been reduced, even as you've had corporate governance reform, this is still not, the shareholder does not reign supreme yet. And in general, that even though we're seeing lots of bottom up change, even though we're seeing, labor markets change in important ways, even though you are seeing a little more startup activity, these things still take time. It is not happening overnight. It is not, it is.
Do you worry about it going backwards though?
It's not so much that it's going backwards, but I do think there's still a risk aversion, and that, that it's going to, the steps forward are not going to be huge leaps. They're going to be, and it might be a sort of 2 steps forward, 1 step back situation constantly. And it felt like that with Abenomics at times where, okay, you did this bold thing, but then you don't sort of follow through on it. Or, there's still a degree of deference to big business, or still a degree of deference to the agricultural lobby, whatever it is, that you can't.
It's going to be more stop and start than it is going to be a dramatic, wholesale change.
Yeah, and then I think we saw in this LDP leadership election, you had bolder options available, and you ended up with sort of a more cautious, risk averse, familiar type of figure rather than someone new, someone untested. That there's a lot of risk aversion, and so also when you get setbacks, when you get shocks, it's gonna make it just a little harder to push things through. And the fact, and this is not something that's unique to Japan. I mean, I think sometimes it gets, because Japan, it's harder to understand the political system. It gets maybe orientalized a little bit, like inscrutable Japanese political system. But the fact is, Japan is an advanced industrial democracy. There are a lot of stakeholders. There's a lot of entrenched interests, and getting anything done does require kind of navigating a lot of veto players, getting a lot of buy-in from a lot of different players. But that's not unique to Japan. I mean, go look at any G7 country, right? Yeah. It's going to look the same, maybe in some issues more than others, but advanced industrial democracies are complex and have a lot of different veto players. And that's just sort of the nature of the beast. And, it tends to look, Japan tends to get talked about differently, or like that this is sort of uniquely Japan, but it's not like that.
Right.
It's just,
it's just because we don't understand it, or we're not as close to it. Okay. The final question I have for you, you mentioned that you said that the next 10 years are going to look a lot different than the last 10, but everything I kind of see shows that it's like all the same. What do you foresee over the next, decade that you think will be so dramatically different in Japan?
Well, I think we're in a new period of political competition, that you had, so since the, since the end of the Cold War, the LDP had been in power from 1955 to 1993, uninterrupted. They lose power in 1993 for a year. You mean
they had never
lost? They were never out of power. They were never out of power. So they lost power for a year and a half in 1993. Then you had this period from like 1994 to 2012, where really you had wholesale political reform. You had the introduction of this electoral system we've talked about. You had sort of the emergence and the stabilization, basically, of a 2-party system that ultimately in 2009 culminated in the first ever kind of change of ruling party as a result of an election, where you had sort of the LDP is thrown out, a new party comes in. They had 3 years in power. They made a mess of things, and then everything just fell apart again. So you ended up with this system of under Abe, just total LDP dominance. The LDP complete control of things, enormous majorities, completely unchallenged. The opposition changed names, the parties broke apart, they fractured, and now we are moving back into what looks like sort of the beginnings of a new 2-party-ish system, and more competition, and actually what happened during the Abe years was voters basically stayed home, independents stayed home. And so turnout fell. I think we're seeing an increase in turnout. And some of this is young people, again, talking about those young candidates. There's a real frustration with how Japan has been governed over the last decade, and really wanting something new and trying something new. And so it's not clear how this is going to take time. I think it's going to take a few electoral cycles for this really to play out. the sort of unchallenged dominance that you had of the LDP for, during the Abe years and really up until the present, that it's going to look different. And that is going to result in governments that are a little weaker, maybe prime ministers who kind of are in and out of office for shorter periods of time. Maybe just divided government, where you have one party controlling the upper house and another party controlling the lower house. It's going to look different. And therefore, you shouldn't expect necessarily that the policymaking is going to be as coherent as you got during the Abe years, where, I talked about, experimentation that happened. Abenomics, above all else, was sort of the government having the room to experiment with a lot of different types of policy.
Right.
That is, you're not going to have governments that feel as strong and as comfortable with that, with being able to experiment. And that's, I think, for investors, it might be frustrating. Which doesn't mean you're not going to see change, because I think, as we've talked about also, there's been a lot of bottom-up change and a lot of things that are going to happen because people are voting with their feet. Businesses are making decisions regardless of what the government's doing. And so it's still going to look different, I think, in important ways, but it's going to be less because of things the government is doing and more because of businesses and people voting with their feet and doing things different because they have to.
Well, that's a great place to leave it. And before we go, we got a couple of things we're going to do. First of all, I'm going to talk and ask you one of my triple Bs, where you have to come up with a new book, broadcast, or band that you've recently stumbled across. And if you don't have one, I'll let you do an old one. Do you have anything that you can come to mind?
I don't know if this is different from some of your predecessors or who've guests you've had on talking about this. There's a comic book series / graphic novel that recently restarted after a bit of a hiatus called The Department of Truth. And I think it's awesome. I've not heard anyone really talking about it. It's by James Tynion. And it basically is that there's like a part of the US government that shapes our reality. That basically, like, it's a world, like, if people believe enough things, like if people believe in UFO abductions, like they basically become real. And you have this department of the US government that is trying to snuff out things that it doesn't want, or trying to shape the narratives that then become reality. I mean, and then it goes back to the Cold War, and the Cold War was basically a war between Russia's equivalent it's a really cool series. It's still new issues are now coming out again. I love it. I love things like this. It's sort of like conspiracy theories made real. So it's a cool thing. That's
a great pick, and I've never even heard it. Okay, so I pulled it up. So the Department of Truth, Wild Fictions HC, is this it? Like you pay $30 an issue kind of deal?
I just read it. I've been reading it on my Kindle, where it's like a couple bucks.
Oh, okay. And so you say it's a comic, like is it graphic or not?
Yeah. But
your Kindle has like the pictures and stuff, and it shows up well.
Yeah. Because you can zoom in on the frame, like you don't. Yeah. So I just read it like on a tablet, and I double click on the frame, and it zooms in, and you can kind of look closer.
I had no idea.
Yeah, no,
that is a great pick. That. I like it. It's completely different. Something that nobody's ever, picked before. You're the first, comic book choice. I love it. Awesome. All right, Tobias, it's been a real pleasure having you on. But before we let you go, why don't you tell people where they can find more about you, read your great Substack, and tell people how to contact you.
All right. Well, so I've got a few different ways and audiences that I write for. So I this year started a business called Japan Foresight, which is a Japan-focused political risk firm, let's say. So it's really for market participants. The way politics affect economic policymaking. So a lot of what we've talked about, right. and really trying to be timely when events happen. Really trying to get research and analysis out quickly.
So your clients there are like hedge funds, family offices, pension funds, and things like that nature?
Yeah, exactly. So that's japanforesight.com.
Okay, japanforesight.com. For the institutional players that want to contact you and get an institutional product, that's where they contact you.
Yep. And then I have a Substack, Observing Japan, which is, I really tried to not have too much overlap. And that's, a lot of diplomats and embassies read that, academics. That's just more like political, like sort of pure political, like Japanese political nerd stuff.
Okay.
Like I wrote an essay there on so Ishiba wrote like a campaign book right before the LDP leadership election. I read that, wrote a long review that I thought really gave because I thought the book really gave some insight into him and who he is as a politician. It's not the kind of thing that I'm putting out to institutional investors, but but there might also be relevance there. There's still, I think, if you really want to understand how Japan is governed, it's sort of deeper dives into stuff. So I do that there. We've talked about my book, The Iconoclast. So it's as far as I know, the only English language biography of Shinzo Abe that came out in 2020. Last year, I published a revised, expanded paperback edition that kind of talked about the aftermath of his assassination. That's from Hearst Publishers. You can buy directly from them. So would hardly.
And are you on Twitter or X?
I am not quite as active as I used to be, but I'm there. I'm on Blue Sky. And
so what's your handle there?
On Twitter, I'm at Observing Japan on Twitter, and on Blue Sky, I'm Tobias Harris.bsky.social, whatever.
Oh, so is Blue Sky picking up traction?
The Japan community hasn't quite made it there, so that's.
I don't think any community has made it there.
So that's why I've got feet in both worlds at the moment.
Fair enough. Okay, Tobias, it's been a real pleasure getting to know you. I appreciate you coming and spending time with us. I've learned so much today. Thank you for your time.
It's really my pleasure. Thank you for having me on.
All right, Patrick, it's time for Talking Charts. What do you got for us?
All right. Well, let's talk about the top three things we were watching a couple of weeks ago. One was the bottom in oil. Well, guess what? I'm going to repeat the same question this week. It's boy, is it an interesting one. We'll talk about actually in a second. Earnings season, which is going to appear back in the same thing, but the inflation numbers. What did you take away? Like inflation is not running low.
Well, it came in hotter than expected. The real takeaway from it is how much the market is looking through and doesn't seem to care about it. And that's the interesting part about it. The market has assumed the Fed has kind of adopted a policy that they believe inflation is on a disinflationary path back to 2%, and therefore they don't need to worry about it. The real question is, what if we get a couple of these, Patrick? I know that's hearsay, but
No, you know what?
Hearsay.
That really
heresy.
Is. It's heresy.
Heresy. I'm getting my words wrong. It's not hearsay. The lawyers are all shaking their heads at me.
But what is worth noting is like the narrative, which I still don't rule out, is that the whole soft landing, no landing camp might be getting it wrong. There's still something in the post-election period that's coming. But by far, the single most dangerous thing to bonds and to the entire narrative has to be that there is a soft landing, no landing. And when if that scenario happened with hot inflation, the Fed will have to quickly shift on their over dovishness, and the market's going to start doing all sorts of shit that it didn't price in. And there's that would definitely, in my mind, be the curveball in the market, and it could happen. I'm not it's not my favorite scenario, but you can't take it off the table.
Is that what you think about? Is that what you worry about when you're staring up at the poster of Lacey Hunt?
Definitely.
Yeah,
definitely.
All right. What do we got for next week?
Well, okay, we're going back to oil. And obviously, I goochered it for oil bulls, but it is, to me, a really interesting scenario in oil, because if I told you, that the global situation was what it was, right? Which is you're sanctioning Russia, trying to shut down its mystery ships or ghost ships that are shipping oil. You have Middle East tensions escalating to levels where they are, shipping lanes being shut down. The question is, and I told you at the same time that oil would be trading near its 52-week lows. Would you believe me? And obviously everyone is leaning off of the fact that there's the excess surplus and all these short-term things. But it shocks me that the market is not pricing in some sort of risk premium that I think should be reflecting at least oil to the top end of its year ranges.
But maybe there is a risk premium in there, Patrick. Listen, I don't believe this, but just to take the other side of your kind of concept, all the things that you just mentioned, it's not like the market doesn't understand those.
Yeah.
And so to me, because they're so obvious, they must be built into the price.
It has to be. But
historical
levels of shorts. Historical levels of shorts.
Maybe there's a reason for it. Maybe it's because there's a lot of oil out there.
Yeah.
Listen, I'm not an oil bear, but whenever I hear people say, "Oh, would you believe this is occurring given this?" It just leads me to believe that, that there's a good chance that they're misinterpreting what the true state of the market.
Yeah. You know what? If we were trying to build a bull argument where, oil should be at $90 to $120, then I would definitely make support your case that, maybe everything's being priced in and you can't at least lean on that thesis for oil to go up. But the arguments that I made, are they not in a logical stream, a justification why oil should at least have a floor underneath it, which is like, oil doesn't go,
but it does have a floor under it.
Well,
it hasn't gone down yet.
Hence the question, does oil make new lows? Is our top three, like, is this that lower boundary? Like, is this a level where risk premium has to keep oil at some reasonable level here? And, I don't know whether I want to go down the conspiracy rabbit hole of whether oil's being election influenced or not.
Save that for your other podcast.
Yeah, exactly. But it'll be interesting to see, what happens
after
a lot of these prices.
I'm not going to go down the conspiracy rabbit hole of saying that it's being kept down for the election, but it's going to be really interesting to see what happens after the election. Is that what you're saying?
Can you repeat this? I didn't hear it the first time. No, but it'll be interesting.
I think one of the things that you should just be careful about is using what's in front of you as like a justification for the current price, because I think you have to assume the market knows that. So you have to ask yourself, what doesn't the market know, or what does the market assume that might be incorrect? Yeah. And one of the things I would say is the market might be looking past the Mideast situation and saying, listen, this is a lot of bluster. Nothing really going to happen. I'm not worried about it. So that could be, well, no, I think there's a good chance that the market is looking past that. But more importantly, I think the market is looking at this and saying, I think that we're going to go through a global contraction, and between China shitting the bed and Europe rolling over, we're using less oil. And so the surprise might be that come next year, there's more demand than the market expects. So if I was making the bull case for oil, I might say, well, listen, all the bad news, everyone knows it. Everyone's talking about it. Sure, there might be a tiny little bit of a geopolitical premium in it, but the reality is even that is pretty minimal, because we haven't had any real escalations that have caused any problems in the Mideast in terms of oil supply. So that's kind of, the market's gotten lulled into thinking that that's not going to be a problem over the long run. And then to top it all off, there's this kind of tendency for the market to assume that we're entering into a global economic contraction, and they definitely think China is terrible and never going to be able to fix itself, and there's never going to be any demand out of that. So it was easy to construct kind of the bear narrative. And if I was to kind of push back on it, I'd say that at this point, the bear narrative is getting almost fully priced in. And if we did have a surprise to the global economy to the upside, it could be the demand side of the equation that actually drives oil to the upside, not the supply side. Everyone's focused on the supply side. I think the supply isn't as important as the demand side. Anyways, that would be my pushback. I don't know. To me, I think there's easier trades out there than trying to pick this one.
I also like, okay, I'm going to quickly just share the chart. And the one kind of thing that I want to observe here is that when you go and look at crude oil back when it bottomed after the 2023 decline, it did take over 2 months for it to test the lows numerous times, including two very violent $7-8 drops in crude oil that happened within days, each time not making a lower low and creating ultimately the base that drove a counter rally months later. And here we are today, like 1-2 months into it after a couple of pretty violent stabs to the downside. So once again, it's kind of those scenarios where, are we seeing, where the lows are likely to be forming, and will that inevitably create a base that in the post-election period, see some potential counter trend rallies? At this point, my call on the bottom being in last show, it's on thin ice. It's we'll see. This is a very key kind of level, especially today's big kind of down day. All right. Let's talk about number 2, and that's the jobs numbers. So November 1st is the Friday. So the jobs numbers will be released a few days right before the election. Market continues to look to see if there's signs whether or not the economy is slowing. I don't anticipate, a few days before the election that if there was ever a number that needed to be massaged, it would be this one.
But don't want to you don't want to claim there's any conspiracy theories going on.
I'm just saying, if there was going to be massaging, that would be a very logical one to massage. If there was. The point is, I doubt there's going to be a big miss. I think that the number comes in line.
Okay, I would even argue that the market would be fine with a miss. I don't think it's that big a deal, and it would be more worrisome if we had yet another one where the economy ended up being stronger than everyone expected.
Well, yeah, the elections aside, that would be a market thing for sure. Because if we have back-to-back strong jobs numbers
along with a hot CPI,
with a hot CPI, then everyone is going to start playing the idea that the Fed pivot was policy error.
Right.
That would cause the bond markets to make you quite happy.
Yeah, but that's not going to happen. Bonds always go up; they never go down.
Number one.
What's number one?
Earnings. We talked about earnings earlier, but we're now here. This is the pig in the python moment, particularly all the Mag 7s coming up next week, and not next week. In 2 weeks. Actually, it's going to be interesting because not this week, but next week, we have a huge number of releases and the jobs numbers coming up on that Friday. So that's going to be a true data-driven kind of market environment.
It's also going to be the week before the election. It's going to be spicy.
Yeah. It's going to be spicy. That's for sure. So far, the banks blew out. Like like all the banks are ripping on the upside, but there are definitely some earnings revisions that are showing some broader kind of lowering of expectations. It'll be really interesting to see where the guidance comes when we get to the kind of real meat of the earnings season. Do you have anything that you're anticipating?
Well, I hear you about the expectations having been raised, but at the same time, a lot of folks have been arguing for the past few months that there was no way that the stock market rally was going to broaden out, and that this was the final gasp of it and stuff. And I think that what we're seeing is actually from an earnings perspective, we're starting to see other, sectors make money. And I think it's funny that we're all like, even we're guilty of this, Patrick. We're talking about Mag 7. Why are we so focused on Mag 7? The reality is that it's just another one of the sectors or indexes. No, but
their earnings are a huge freaking component of the S&P earnings.
What I'm saying is there's tons of opportunity in other stuff, and other stuff is performing great. And in fact, if you look at like the S&P 500 equal weight, it's hitting new highs. Yeah. What's Mag 7 doing? It's not hitting new highs.
No. The NASDAQ is a huge laggard.
Yeah, the leadership has changed.
The financials have really contributed to this too.
And I think that this has been the big surprise that everyone, that was always poo-pooing the mid caps and the smalls and the equal weights.
But the small caps have been shit.
No, they have. I'm not going to disagree, but I'm just saying that we're getting the first stage of this broadening is happening. We're getting movements into the rest of the market.
Yes, into the large cap market.
Yeah, and so far so good. And all of that, it's actually driven by earnings too. It's not just kind of like people selling Mag 7 and rushing into something else because it's the latest trade. It's the earnings are actually getting better in these companies.
Yeah, but there are different rotations going on. That's certain sectors that just didn't get any love in the last 6 to 12 months that are now getting some rotation, because as you pull that much money out of the Mag 7 and sprinkle it elsewhere, there are definitely areas that are finally showing signs of life, right?
And that was always my point, is that we can have other parts of the market going up even as the Mag 7 goes down. I still contend. I think we could have the Mag 7 get crushed and everything else go up. I think that you have to be really careful talking about the market as a whole anymore, and that increasingly there's different parts of it that are doing well. And I think that the real message that not enough people are focusing on is that there is a ton of other stuff that's going up. It's a ton. Like there's like even like take our stupid gold miners. We were just looking it up, me and my buddies. The gold miners, the GDX is up more than the QQQs this year.
Yep. Oh no, they've been on fire, bud.
But there's a million of them like that. You just like XLU. Like, I don't know if it's up as much as the Qs, but like on a risk adjusted basis, it probably is.
This trade doesn't make as much sense to me, because I get it. Power consumption from AI is going up, but the thing is that these utilities, can they truly leverage that for big profits? And I'm not so sure I connect the dots on that. They're going to be the big benefactors.
I don't either, Patrick, but the reality is that the Mag 7 is huge. As money comes out of that, they have to find somewhere else, another story to go to, and it pushes up other things. And all these other things are tiny compared to Mag 7.
Yeah.
Tiny. And when the money comes out of those, and that's what's happening, everything else gets a bid. And that's always just kind of been my main thesis on this.
Okay, so let's talk some charts. Okay. First off, the stock market. At this stage, no matter how much I internally, like the way you're a bond bear, I always have a stock market bearish side to me that just wants to be short. But right now, what continues to be undeniable is that the price action is outright bullish. Every dip is bought. The price action is cumulative, above all trend lines, above all moving averages, pressing new highs on a continuous basis. I always like to use the football analogy. And in this case, the Bulls are in possession of the ball and they're making the drive, and there's no turnovers whatsoever, no sign in there. This has been a very mature rally. So if you put it in the context of, let's say, just comparing to previous rallies, the previous rally in the summer that lasted about 800 S&P points in about 88 days. It lasted almost 3 months. This current push in the market is about 73 days in, but also already at 800 points. Point here is that this is now a stage where inevitably there will be a catalyst for a profit taking, not necessarily a major top and a big crash, but the markets advance in waves. And at some point, this bull advance is going to be checked. But there's no sign of it. This thing, and we've talked about it on the show numerous times. Markets love to act like a magnet to big round numbers. Thing is how is 6,000 not at this point the kind of almost like magnet to at least print up there before a correction begins? I don't see a lot of reason unless there's a big surprise on an earnings miss that changes the market sentiment. You have to give the bulls the benefit of the doubt that they're going to smack that 6,000 here.
Okay. I'm kind of indifferent. I think that there's a lot of uncertainty going into the election, and nobody wants to talk politics, but one of the things is that how much of this rally is being driven by expectations that Trump's going to win, and if those expectations don't follow through, what will that do to the market? I think that we could have, you're worried about an earnings miss from,
but that's not in just 2 weeks. Like, we have time to talk about the
no,
next
fair enough.
episode,
You're absolutely correct. But what I guess I'm saying is that the market might get more concerned about that in the next 2 weeks, and let's see what it looks like afterwards. I'm not as bullish, Patrick, because I feel like everyone is bullish.
I'm not actually. I actually think the asymmetry is completely skewed against the bulls. In other words, for an extra 100 S&P points, you clip a 1 or 2% advance in this market. You're getting, you're risking getting caught in a 5 to 10% market correction. And so this asymmetry is not in the favor of the bulls. But the trend is, and the short-term move is. And so it's one of those scenarios it's like a game of hot potato or musical chairs. It's like everyone's staying in the game, but you got to make sure you secured your chair.
It's like Chuck Prince said, you got to keep dancing.
There you go. Okay, let's keep going here, but let's talk about this gold move, because what a breakout. At this stage, 2,700 was a very popular target area for quite a while. So the fact that the gold has beaten a target zone that has been so openly talked about is only showing how much that accumulation is being dominant here. It didn't double top. It broke to a higher high. Like, I don't know how 2,800 or 2,850 isn't printed here in a couple of weeks on a continuation pattern for this on the upside. I, though, like the S&P, it just feels like it's almost like the later innings. Like you're sort of like, if you're buying gold now, you're sort of getting in on the 7th and 8th innings. Now, you talked about that analogy of that one guy that sold 2 days before the top, but missed.
That was Jim Rogers.
Jim Rogers, but missed 50% of the move.
Yeah.
Right. Like I mean, it's always possible this thing goes stupid on the upside, but at some point, gold isn't a magic asset that doesn't follow the rules of every other asset. There's going to inevitably be a profit-taking cycle, but right now it is very bullish price action, and so at this moment, it's one of the same scenarios as the market, which is you got to respect that the prevailing trend is up, the accumulation is very much there, and it's just a matter of seeing which upper targets get fulfilled before a correction starts.
So, Patrick, to me, this feels a little bit like in September of last year when the bond market went no bid. Was it last year? Yeah, September of last year when the bond market went no bid. And all of a sudden, me, the grisliest of grizzly bond bears, was getting lectures about what term premium was and how this was going to blow out and the U.S. wasn't going to be able to fund itself and the bonds were going to go to, 10%.
So what is your gold?
So now my gold situation is now all of a sudden I'm getting explained to me that gold can go up even with rates going up, even with the U.S. dollar going up, that gold is its own unique asset. Central banks are buying it. My point is I liked it a lot better when everyone told me I was an idiot. And now all of a sudden I see like Josh Brown on CNBC talking about how you can't lose if you own gold. It basically goes up in any situation. Bank of America with a big report out talking about how gold's going up
3,000 targets.
Yeah, it's just scaring me a little bit. I don't,
of course,
like
you hate when being in the trade where everyone agrees with you. I get it.
Yeah, nothing makes me more scared than when all of a sudden everyone on CNBC is saying the same thing. I'm the same way.
It's late inning move, but is it going to Jim Rogers is the big thing. Like, are we going to see a scenario where it really needs to sucker in the chasers before the rug gets pulled out? And even then, if it gets pulled out, it just means it could be like uranium, right? Like if you step back and let's say look at the correction in uranium, it wasn't exactly horrible. It just disappointed everyone that it didn't, after such an extraordinary bull run, it gave back half of the gains over an 8-month correction. Yeah. It's not like it wasn't a bull market in uranium. It wasn't like there isn't money to be made in the long term. But after everyone got stupid bullish, it did this stupid parabolic little blow off on the top. And then it started an 8-month mean reversion where it shook out all of the renters that are only in there for the momentum. It kind of shook out everyone that was over leveraged. And then looks like it's even resuming back again now, right? Like, point is that it's not that you have to become bearish gold. It's just at some point, gold is going to disappoint all of the bandwagon hoppers. And the question is, that could be just a sideways gold market for half a year.
Yeah, I agree. The other thing I think about gold, Patrick, that is underappreciated is the fact that it really is controlled by central banks. And everyone, for a while there, I remember we would get news from the People's Bank of China saying that they've stopped buying. And people would get bearish on gold. Oh, I'm going to sell my gold because the People's Bank of China has stopped buying. I'm like, the People's Bank of China is not interested in telegraphing their moves to you. The fact that they're telling you that they're not buying gold shouldn't mean anything. And if anything, it should mean the opposite, that they probably are buying gold. And so going back to this, the idea that they're going to continue to chase if all of a sudden the American investor gets the hold of gold, I think is naive. I think they'll step back. And to your point, I don't even know if you're going to get the blow off top. I could see them just all of a sudden walking away and everyone goes, hey, wait, I thought that this gold was in a bull market. And all of a sudden, without China there bidding for, a couple of months, it'll shake everyone out. So I think that one of the things you have to remember about gold is it's trading very much choppy because there's a big sophisticated buyer that is not going to be played, that is going to try to make this as frustrating as possible. So kind of ask yourself, what would piss everyone off the most from here? That's probably what's going to happen to it.
Yeah.
So Patrick, just for the record, I think it probably goes down a couple $100, pisses everyone off, everyone gets rid of it, and then you should buy it then.
Well, but you know what? Your scenario is one that I think could happen once gold still goes up 100. Like, just because you don't like where everyone is right now and on their position doesn't mean that it means it has to reverse today.
No, I
agree. In my mind, there's still the primary. There's no reversal sign. There's no bearish engulfing candles. Nothing that is kind of like saying that something flipped and something changed.
The only thing I know for sure, Patrick, is that when I finally get my $1,000 up week in gold, I will not be long.
That's a fear. That's a fear.
A fear.
Well, you know what?
It's probably.
Why are you not jamming in some gamma? Like you should. Like buy some lottery tickets for your $1,000 moves
because I'm more into the selling the naked puts like what you have up there on your corner screen.
That's right, baby. You know what? Why not? Why
do you tell people about your new little sign that are listening to this?
Well, absolutely. It's listen.
It's called Let's Get Naked Puts.
I love income writing. It's something actually a big picture that we've been doing. In fact, I started my career working at a portfolio manager that was a $50 million pool that all we did was income writing. That's where I learned my options, buddy. And while I always love to speculate with long option stuff, income writing is a very important part of my thing. And so I just thought it would be awesome.
So you're going to get the upside down pineapple, get the Speedos, and a big 70s porn mustache. That's
Done.
what I'm expecting.
All right.
Okay,
Sounds
next
like a plan.
chart.
Let's talk silver.
Okay.
The poor man's gold. This is only approaching its previous highs. So like while gold has been really running, silver looks like it just is about to break out. The interesting part is if this breaks out to 52-week highs, it measures to $37. Question is this actually where you could time the top of gold? Because like if you think about it, silver is where speculators have finally said you got to be in because they chase where they can get the leverage. And if silver starts going parabolic, then you could say, shit, gold's going to probably put out its peak at some point. Like the question is this an indication that there's still more game to be played? And is there still like a solid 10% rise in silver coming here first?
Well, I would say that like North Americans like silver, like the Asians don't. They want gold, and so and that's the difference, I think, and that's why silver is getting more juice. It's going to be the Americans.
All investors want to make money, and when this thing breaks out and is giving you the leverage, people will chase it.
I hear what you're saying. I'm not disagreeing with that. I'm saying though the fact that sentiment has changed in North America is why silver has all of a sudden got a bid.
No.
So silver is more of a true reflection on precious metals from North America.
Yeah.
That's all I'm saying.
We can't talk about silver and gold without mentioning copper. Now, copper pulled back, but this is the interesting inflection point, Kev, because it's at its 50% retracement of the prior rise, right at the 50-day moving average. So in a very typical corrective pattern, if copper is in a bull market, then this should be where we get buy signals. Now, I'm not saying that we are going to get buy signals, but this is actually where I'd be looking for a breakout signals. Like if copper is destined to go back to $5, this is a very logical place for a new rally to begin. And I'll be watching to see whether we get some breakout signals on the upside.
You hear that, copper? Patrick's going to be watching.
All right.
Can we talk platinum?
Yes, but before, okay, let's do that.
Well, since we're on the metals.
All right, let's.
I must say my interest is getting piqued in this. I think it's worth a shot on the long side. Below the cost of production. Feels like uranium, 2-3 years before it took off.
Yeah. No, I'm not going to disagree with you. It's interesting. It's definitely interesting in that, and even palladium. Holy shit! Actually, this chart looks great. I didn't look at this. No, this looks fucking awesome. Like look at this. All right, so this thing's been murdered for a couple of years. It looks like the China stock market for the last 4 years, 3 years. But like you have an extended basing formation of a prolonged downtrend. It finally broke out of the trade ranges, holding above the 50-day, all above its retracements, and getting you breakout candles. I didn't even know this until this moment.
Well, don't say I don't ever offer any value add for you, buddy.
Oh, you didn't say palladium. You said platinum.
Oh,
this is true. My chart, bitch.
All right, what do you got? We'll go to the next one.
Let's talk natty. And I want to talk about the fact that, you can't look at the continuous chart, even though you can, but you got to look at, let's say, one of the winter contracts, let's say January. Nat gas is being murdered. Yeah. There is
like in the wood chipper.
It is the widow maker is making widows like there's nobody's business. like because the continuous contract is rolling up the term structure for winter gas. You've got it deceivingly looking like it's made higher levels, but you pick any part of this fucking strip, you're being chewed up and eaten out and spit out.
Yep.
Like it's ugly out there. I wonder when this thing
global warming, baby.
Maybe I got to go and sell some naked puts.
Yeah, that's right. Optionseller.com.
What can go wrong? I'll go 3x leverage straight in there. Like I'll lean right into it.
Double up into it. And then when I blow my fund account, my clients want money up,
I'll wear the Rolex.
I'll wear the $40,000 Rolex and tell them how sorry I am. Not sorry enough to sell my Rolex and give your money back, but I'm sorry.
All right. Uranium. Now, let's talk because spot uranium hasn't started to move. And while Sprott has closed the discount, it's basically trading at NAV. Yeah. Like buyers are trying to buy. But, this thing is being pinned by spot prices, but it hasn't stopped uranium stocks from fucking running like they stole something. Like unbelievable. Amazon makes the one announcement that they're going to switch to like those was it modular nuclear things, whatever it is, and suddenly no one can get enough of this shit. Like Cameco is ripping to a fresh new high, like it's going to 70. Like unbelievable fucking breakout on these many. And what a roller coaster. The thing wipes out 30+% of its value in a month and then fucking rips 50% in the following month. Yep. Unbelievable volatility. Unbelievable.
By the way, for the big funds, that's all they can own is Cameco.
Yeah.
Like if you're a big fund, there's nothing else you can own.
Nothing. Because
like you used to be able to own that stupid place in Eastern Europe or whatever, but they can't buy that anymore.
But they can't buy the ETF?
I don't think it trades enough. Like I think most funds will just buy Cameco. Maybe I'm wrong. Maybe you're right. Maybe they will go buy the ETF. But I think on the whole, if you're a big fund and you like the story, you just go buy Cameco.
Yeah.
Like you like the nuclear story, I mean.
Okay, but let's talk about bonds. Mm-hmm. I know you just did a piece doubling down on your short.
Yeah.
I need to know why. Because I don't bother read your shit. Like give me your thesis, because here okay, let me give you my thesis so that you feel comfortable knowing that I'm on the other side of your trade, and therefore you feel that much better about it.
Okay.
But I'm not actually at this moment outright bullish bonds. All I think is that there isn't the backdrop to bring them back to where they were in the summer in this thing. Like to me, this correction is now brought them to where is probably far more of a fair value zone of where they probably will be until new macro data gets revealed. Now, of course, if inflation fucking starts running away and a soft landing comes around and oil goes ripping to $90 a barrel, yeah, bonds could go back to that low, but that's not necessarily what I have high conviction on actually happening. And so I'm not actually outright bullish bonds, but I don't think we're going to see 107 on the 10-year back where it was trading. So
here's a question for you. What scenario do you envision them doing well?
No, it'd have to be fucking the hard landing, everything going to shit, and Fed having to cut, let's say 300 bips.
Okay, so they cut 300 bips. So they go from
because
5 to 2. Okay,
because there would be.
Agreed?
Listen, yeah, okay, but the thing is that would be under a backdrop of the economy being in contraction, spending going down. There will be disinflationary pressures in that environment, Kev. Now I know the stagflation scenarios you can
let's take your example. I'm fine with arguing this. So your scenario is the Fed has to come and cut 300 basis points. We go
the
from
bull
5,
scenario would be, which is by the way, my highest
fair
conviction.
Enough. Yeah. But let's just go through this. So the Fed goes from 5 to 2 in a hurry, right?
Yeah, like in a year.
Okay. I completely agree. I think that that's a possibility. Okay. Do you think that the economy is when the Fed cuts that much, do you think the economy is going to respond, or do you think it's going to be like the old days when they cut rates?
It's a lag. There'll be a lag.
No, but there's a lag. But will the economy respond? Like, will we be pushing on a string like we were before?
No. No. This is where my Lacey Hunt poster will go to the side. The one thing I've made
can I just finish though? 1 second. Can I finish? So you agree that if the Fed cuts from 5 to 2 in a hurry, the economy will respond positively
down the road.
Yes, but the market's always forward looking, so the Fed will respond positively. Okay, so Fed funds have gone from 5 to 2. The economy is going to look better down the road. What do you think happens to the yield curve?
Okay, so that is
1 second. So I can tell I can tell you what's happened in the past. The yield curve is gone, and it is generally from the point of maximum inversion to the point of maximum wides. It has moved 400 basis points on 3 months to 10 years.
Okay, so here's the
if it goes to 200 basis points, let's just go through this. It goes to 200 basis points on 3 months versus 10s. Okay, we just said that basically 3 months are going to be 2. What are 10s? 4.
Yeah, but the thing is that my view is that my view. Okay, so here's the 2s10s on a weeklies, right? And so we have seen scenarios where these things have been like 2.5 points wide, right? And even here, I'm not even necessarily anticipating that this has to blow out big on the upside. But as far as I'm concerned, like if I go to the long bond here on a big weekly chart, could we see a scenario before you're right about the bigger bond thing? Because listen, go out to 2026 through 2029. Could we see another resurgence of big inflation where long bonds are being forced to price in even 6% interest rates and have another key leg down? I won't object to this.
But I don't think you even need that, Patrick. I think even in your scenario where they cut rates to 2% and stimulate that the 10s are 4%. So to me, for you to make money, it means we have to return to the period of the post-GFC, pre-COVID period when everyone was pushing on a string and we were suffering from lack of demand. And so if you said to me, I think that everyone's going to tighten their belts, are going to stop spending, they're going to try to balance the balance sheets, and there was going to be no deglobalization.
I think that's a big assumption you're making, that 4% has to be that lower boundary. Like, there's no reason why we can't see sub 3% on a short-term basis, where basically, even if that isn't the average, like if you take the average of 2025, it might be 3.5 or 4%. We could still have a period where over a 6-month period that we have yields temporarily under a period of where the market gets spooked by what the fuck is going on.
Okay, so I completely agree, Patrick. We could have a dip there. But my question to you is, if that occurs, are you going to be better off owning 10s or 30s, or are you going to be better off owning Harley Bassman's TUA product?
Okay,
so,
no.
So my point is, on a risk-adjusted basis,
owning the leverage twos, I get it.
And like we haven't even talked about the Stanley Druckenmiller kind of term premium expansion, the bear side. Like I can make a case that even under the bestest scenarios, you're barely going to make money on owning the long end. And I haven't even told you about the bear case that I could tell you about. Whereas if you go look at the term premium, Patrick, meaning the amount extra that investors demanded over the expected policy rate over the life of the bond, kind of the uncertainty, you can see in 1960 it was 0. By 1982, it was 500 basis points on the 10-year. So given the fact that we just had 2 of the highest years of inflation that we've ever had, or not ever had, but ever since the 80s, and we have record deficits, don't you think it might make sense to have a little bit of term premium? So if all
Okay.
we did was return to the term premium that we experienced from 2000 to 2010, that would be 200 basis points more on the 10s. So I could argue that, the 4% is actually conservative, and that even if the Fed lowered rates to 2%, you could see 5 or 6 on 10s.
You know what? There's a bunch of JGB bond bears that made that argument for a decade, and it was the worst trade of a decade. All I'm saying is that there's a lot of reasons why central banks may not like your scenario and may open up the balance sheets in order to facilitate that kind of outlier risk to be extended way into the future, because they're going to simply keep things into a fucking orderly market.
So I don't disagree with you there. And that would be the argument against any real problems occurring in the bond market, meaning that the put is overpriced because there's no way they're going to let it go to 10 because the system breaks at 10 or whatever the number is, 8, 7.
I also think for market stability, like the fact is that who's holding all this shit on their fucking balance sheets? It's insurance companies and banks and other things. Like the reality is that that if they allowed this kind of an interest rate rise on the long bonds, you're going to seriously create capital constraints on these banks that have to fucking take losses and do all sorts of shit to deal with this.
So Patrick, I'm completely in your camp, and I just think that eventually that's ultimately why, even more than the bond short, a trade that I like even better is long inflation break evens, because ultimately that's going to be the mechanism where you're going to see higher inflation and there's going to be repression. So I'm not sitting here telling you that the US is not going to be able to fund itself. I think those arguments are funny. Like I'm not one of those bond bears that says we're going to get this moment when, like, the long bond, there's going to be a failed auction. And that's not what I'm saying. I'm just saying that the reality is that most investors have spent the last 40 years in a secular bond bull market, and they don't understand how a bond bear market works.
Right.
And they don't realize that if the Fed actually cuts too much too easily, that the long bond could go down in price, up in yield. And you saw Stanley Druckenmiller, who's obviously, head and tail smarter than me. I'm not even, my net worth's not even his bid offer spread on most of his positions. And he said, when the Fed cut 50 basis points, I sold the long bond, because he understood right then that was bad for the long end, because that means that the Fed is not as keen on keeping inflation down. Anyways, that's my argument.
All right. Well, let's see how it plays out. I feel like this is a deja vu of when me and you were in Chicago, where
you just like mentioning this because I was 6 months early or whatever.
No, that's 6 months, 3 years fucking early, buddy. 3 years early.
That's not true. There was a bear market in there, and then COVID hit.
I just feel that in this macro space, that it always shocks everyone how long it takes for big macro theses like this to actually manifest. And it's not that you won't be right, because you're in a big enough picture thinker that there's an inevitable force that will lead to these things. But what will be shocking is that we might be for January of 2026 still making the same argument.
Yeah, but the key is, if we do have a situation where the economy runs into trouble, and all of a sudden the Fed's lowering at a quick pace, and the 10-year goes 3.5. I don't want to hear it. I told you so, because I'm never disagreeing with you on that. Yeah. If we get a situation where the curve becomes deeply inverted and that the long end leads the move downward, then I will be completely willing to say you were right, I was wrong. It's time. You should have bought the long end, not the front end. Yeah. But if we get a situation where the economy runs into trouble and the Fed cuts, or the market cuts for the Fed, and the Fed follows the market down and the curve steepens, then that's not something I disagree with you on. I definitely think we could get a spike down to 3.5 on the 10s. I'm not saying that won't occur in a kind of crisis environment. I'm just saying that in that crisis environment, That's not the best thing to own. You can own Harley's product is way better if you're trying to hedge for that crisis.
But my argument right now that I was making, though, in fairness, Kev, was simply that I didn't think that we were going back to the lows where we were on bonds this summer.
It could be, and I'm not going to disagree. Like I'm not. So I don't know my timing.
That was my one key point, not the bull case scenario of the bonds. I just think that the market overshot with dovish expectations and had to pull it all out. And now we're at a fair value zone where bonds might actually become incredibly boring. And
listen, I'll be honest with you, Patrick. I am shorting some bond vol. Like that is how I am expressing my.
That's a great idea, bud. I like it. Good luck. I'm not going to join you, so I don't want Gucci for you. You saw what I did to the oil trade. All right, so listen. Last thing, fucking China. Like what a chart
it is.
Like okay,
my buddy Louis Gov, Louis Gov, he had the greatest friggin' chart the other day. You know those guys in their when you go and you pawn stuff.
Yeah.
Like what? Like you go and you show them and they give you a price, and there's that meme of
the pawn shop.
And Louis had this thing that just made me laugh so hard. It was like basically China bull market. Best I can do is what is it? One sec. Like let me just grab it here. 1 second. Keep talking while I pull it.
Anyway, I'll pull it up. But I wanted to highlight. Okay, so this thing goes ripping 50%, 5,000 points in freaking literally 2 weeks. And what's amazing is that this thing retraced to the 61.8 Fibonacci like a T, giving back that thing. This is actually now the most interesting moment in China. Why? Because either A, you say that this was all a big joke and this is going to Eiffel Tower, which is this thing is going right back to 11,000 and it had no business doing this move, right? Or what were its previous highs act as support along the 50-day. And now this is the first time you can actually realistically assess the risk of putting on a China trade long. This is an interesting moment. I actually tend not to like being in China. I'm in the Russell Napier camp, but those, if I was, it'd be some sort of like gamma way of like debit spreads or something that would put it on. But anyway, this 13,000 level on the China A50 is an interesting kind of pivot area that I'm watching really closely to see if this turns the market here.
Yeah, so I found it, Patrick. It's like those two guys in the pawn shops and it says China bull market. And it says best I can do is a short-term tradable rally. And I do think it's interesting.
There's nothing tradable with this.
Well,
Gav got it wrong.
Well, it's there's nothing thing. There's nothing tradable about this. Okay. I think it was interesting how Tepper got on and he really goosed this like to a crazy amount, right? Like, let's face it. And it was made worse by the fact that China was on holiday, right? Week, like, so it was like they were on holiday. It's already thin. And this just got taken to absolutely stupid levels. And so I'm not even sure if those prints are real, meaning it's kind of like that VIX when it didn't really trade there. It was kind of some bad prints when the market was closed and all of a sudden.
Yeah, but Kev, okay, but like, look.
No, I hear what you're saying.
This is the Hang Seng Index. This is the Hong Kong Index.
Yeah, but the big Chinese names were all closed when it was like. So imagine the S&P announcing something, like the government announcing something, and then going on holiday for a week, and then everyone's rushing in and buying it, and you're going, well, was that the right price? Like it was kind of ridiculous. So, but long and short of it is, Patrick, I'm with you. I'm shocked at how quickly the sentiment has turned back sour on this. And I feel like people, got too bullish too fast, expected too much too quickly, and now are completely unrealistic. And I'm with you. And the only thing I will say that I'm different than you, I'm selling at the money puts. Like, and I'm, capping it by selling put debit spreads, but I want to be short the vol. I think we're going to chop around here and grind higher. So I think that the way to play this is
You mean
Let's get naked puts. They're not fully naked. I keep my pants on.
Oh, come on. Like a little bit of a hedge. You could if you go far enough out of the money, it doesn't even count as a hedge.
Patrick just wears the eyeglasses or like the mask from Eyes Wide Shut. People think that's the amount of hedge you would use. I know, but anyways, I think it's a great trade. The only thing that scares me is that you and I are on the same page.
I'm not long, so you're okay.
Oh, good. Okay, I'll just go do that alone then.
Yes. Like, listen, I'll let you know so you can adjust your hedges if I'm going in.
You can just journal it into my account when you're buying it. I'll sell it to
you. All right, buddy. This is all I've got.
Okay.
Yeah.
I don't have anything to say, buddy. Thanks for tuning in, everyone. Patrick, where can they find out more about you and your wonderful shop and your firm?
Well,
and
listen,
your crew?
listen. Actually, I want to just drive everyone to listen. I'm trying to build a little bit of traction on my YouTube channel, just Patrick_Ceresna. Trying to put out some shorts and some other fun videos. And so, anyone, I'd just encourage anyone listening, come check out my YouTube channel. I just would love, to add some value to your life with some cool shit.
That's very kind.
How about you, Kev? Where can they follow you?
They go check me out at themacrotourist.com and you go there. There's a chat if you want to get onto our Substack chat. Everyone's welcome. It's a lot of fun and everyone's kind. Listen, bear market, bull market, we're just happy to spend some time together on this crazy ride. Now stick around for the after show.
Gents, what's happening next Wednesday?
Oh, there we go. See, good thing we have someone who actually knows what's going on. I know this. Patrick doesn't. I know what's going on because I'm lucky enough to have ducked. No, Patrick and Cuppy are doing a live Q&A. Is that correct?
That's right, buddy.
Yeah. So Daniel, why don't you give everyone the spiel and how it works?
Are you going to give that job to me? Okay,
yeah,
cool.
I am, buddy. Yeah. You jumped in, and now you got to take the ball and run with it.
You organized it. You're going to have to now fucking take the
You're the one that keeps bugging us to do all these live shit and video and stuff like that. So screw you. You pump it.
Next Wednesday. I think that's the 28th of. Oh, is it the 23rd? It might be the 23rd of October.
Yeah, I think it's the 23rd.
12 p.m. Eastern, and it's going to be roughly an hour. We'll have Cuppy on. We're going to ask him some questions, see what he's trading, and then there's a live Q&A where anybody can ask him Patrick questions. That's going to be it. That's
going to be wild. So it's 12 o'clock on Tuesday, October 23rd.
Wednesday.
Oh, you guys did not do Tuesday. You did a Wednesday. Okay.
Yeah.
Wednesday, October 23rd at 12 o'clock noon, like New York City time.
Yeah.
And you can log in and it's all on YouTube. Is that correct?
Yeah, we're going to stream it all on YouTube.
And if they want to ask the questions, they send them in through the chat on YouTube?
Mm-hmm. Same as last time. So log in, just join the stream, and then you can put them in the chat.
Should we tell people that if they want to ask ahead of time, they can hit you up on Twitter?
They can do, yeah.
Sure.
If anybody's got
any questions that they want to send in advance, send it to them at the Market Huddle on Twitter, and we'll put it on our list.
Yep.
Terrific. All right.
Wow.
So let's talk beers.
Bud Light. So it's a light beer for a lunchtime beverage.
Oh, see, that's why I liked it. I'm such a mope. I'm like the biggest lightweight around. Is it a light beer?
And more importantly, it's a pale ale, which is something that you happen to fancy.
It is. You know what? I didn't even know that, and because I just know I like this one. All right, I'll go first. This is a solid beer. I don't have anything to say.
Kev, is it sessionable?
Well, I'm such a lightweight. 2 is sessionable for me. I'm going to give it a 9.2. That's how much I liked it.
Oh, wow.
Yeah, I really liked it. It's really tasty beer. How about you, Patrick? And then we'll let Daniel come in with the stinker on the low end.
I actually also enjoy this beer. This is a beer where I could easily keep a 6-pack in my fridge. I would rather drink this than a lot of the standard kind of grocery store beers.
Okay.
This is, I recommend those of you that can get access to this out in Canada. This is a pretty solid beer. I like it. I'm going to give it an 8.5, bud.
There you go. Now here we go. The Englishman. What does he say? What say you?
No, I really liked it.
Oh, you did?
And I think it was an 8.8.
Oh, God.
Oh,
There we go. I had no idea. Now, tell us why you don't like our beers.
Me? Why I don't like
you
your,
are
the
kinda
Canadian
shitting-
beers.
Yeah.
Oh, okay.
because he's a pompous ass.
Yeah.
And it's he has to favor his. It's like asking an Englishman why he doesn't cheer for Team Canada. That's like, well, you can't ask that. That's a stupid question. He's going to support his countrymen.
I don't think there's anything that's better or worse. I just had to say it because exactly what Pat said. It's Team England, right? Do you know what I mean?
Yeah, absolutely.
I hear you guys, for your soccer, football, as you guys call it, you have a non-English manager for your team that you just announced.
Most of the UK football clubs don't have.
No, but this is your team, like your country
English
team, the English team.
There's never anybody who's. Oh, maybe the last one was English. The last one was, but this one.
See, that's bullshit. You shouldn't do that.
Eh.
Patrick, can you imagine Team Canada showing up with like some non-Canadian? Yeah, that's not happening.
No.
Like I'm talking hockey. I don't know what the hell goes on with our soccer, but like hockey, that's just not happening.
No, but you know what? As soccer, now that I've lived in Europe for a couple of years, like soccer, I'm calling it soccer, like I'm going to get my ass kicked. Like football in Europe, while it's a religion, it is actually very cross-border. Like there is no like rules. Like the players and coaches move around countries in Europe. Like if you're moving states, going from like California to Florida, like it's people moving around there. It's just normal, very common.
But it just feels like when you're playing for your country, you should have a countryman leading your team.
Well, you know why, don't you? It's because we always lose.
Well, yeah, no, you guys are like the Toronto Maple Leafs.
It's just awful. We're absolutely awful. So we need to do something. So anybody.
Anyways, what do you guys got planned for this week? Anything exciting?
Well, this guy's going to Barcelona. That's why he's working from my office here in Lisbon. By the way, the Rum Shack, baby. Like there it is. Okay.
So why are you going to Barcelona? Just for fun?
No, it's my friend's wedding. One of my best friends. He's getting married, and he's getting married in Steges. So we're actually going to get an overnight coach to Madrid, and then get a train from Madrid to Barcelona.
Oh wow!
Yeah,
that's cool. That's awesome. I was jealous of you guys. You guys live a fancy, rock and roll kind of life.
I really don't, but let's pretend I do.
Oh, come on, Danny. I've seen the wild side of Danny. He's being way too modest.
Okay.
Well,
anyways, that's right. All right. Let's call it a week, and everyone, good luck, and we'll see you in a couple of weeks. And don't forget, Wednesday, October 23rd, noon.
Correct.
Be there.
Happy, Patrick,
or be there, or you suck.
Daniel trying to keep them in line.
Yeah, and the link will be on the Twitter, or X or whatever it's called.
Yeah, fair enough. Have a great week, everyone. Take care.
All right, cheers.
Bye.